Barb, you positive into year end, or a little concerned that in the short term we've overheated a bit?
Well, I think whenever you've had a big run, you always sound incautious to say that you still think there's more to come. But I think I'm very constructive into year end. There's a couple things that have happened. One, earnings have come in very positively, with 2/3 of the S&P having reported. Some 80% have beaten, and by as much as the low double digits. That's number one. Number two, you see this huge fund flows in terms of retail coming in, and that is big momentum money, and I think that's going to continue. And if you look at all the recent macroeconomic data, whether it's housing, manufacturing, the unemployment claims, it's all trending in the right direction. And I think if you look ahead, we're going to have an infrastructure bill. Now, that takes a while to play out, but it looks like corporate taxes are off the table, and the original proposal looked like we could take a nick of 4% in corporate earnings, so that seems to be off the table. And you've got this ongoing innovation in technology and digitization. So there's a lot of positive things. The one big thing, of course, continues to be inflation. And I know that the expectations, a lot of people are worried the Fed is behind the curve on this. Expectations for interest rates next year have moved up in both timing and frequency. So this is going to be something we don't know when that's going to be a fright in the market. I don't see it happening, through this quarter, but it could be something around Christmas time when the market, when all is done, earnings, people are invested, that we have a fright like we did 2 years ago, the day before Christmas. But we will see. But constructive for now, for sure.
Greg, I've been glued to the small caps today. Russell 2000 doesn't quite look like we're going to close at a record high. We're just a few points away. And yes, Avis is in there with its 100% surge, and Rogers is in there, which is getting bought by DuPont. But is this breakout time for the small caps? Haven't seen a record close there since March, whereas the other ones are all there.
So I actually think that we're going to de-risk moderately in the coming weeks. I agree with much of what Barbara said, particularly about innovation and technology driving and having multi-year growth cycle with secular tailwinds. But there are some negative catalysts, I think, that are on the horizon. Just like we are now anticipating interest rate hikes sooner and probably of greater magnitude than we originally thought, I also think that the Fed will obviously announce a tapering plan, and that might be more aggressive than people thought. And that will be driven by the fact that we're now looking at 3% core PCE and 4% core CPI for much of next year. That's much higher than the Fed anticipated. And in fact, I think we'll hit overall 5% PCE this year and 6% overall CPI this year. And I think that will substantiate the need to tighten and to raise rates earlier than consensus is currently expecting. And if that happens, I think we will see some de-risking. Yes, the quarter has been great. Yes, 80% of companies have beat earnings. But on the top line, we have dipped down below that mid-80s beat number that we saw last quarter. And I suspect as these other companies come in, we'll hear a lot of what we heard with Apple. We'll hear a lot of what we heard with Amazon about significant impacts of the continued inflationary pressures, both on the component and raw material side, as well as on the wage pressure side.